are investors who, we have nearly 1,000 investors we're working with. They're busy professionals. They're looking for the long term, but they'd like to see some cash flow up front. And this makes all the difference. I mean, I don't have to tell you with your experience, getting a duplex today, $475,000 duplex in a great area of Florida today, if you're locking in at 7.75 or 4.75, it's night and day difference.
One is barely breaking even. The other is you're doing all right. And then you just want to scale.
Exactly.
100%.
Exactly. So that has kept us in a very solid flow of continuing to do a volume business. I think new construction was key. Florida was key. Adding that part of not only offering single family homes, but duplexes and quads, which very few builders will do. And then the financing, bringing in that financing. You can solve the financing issue for, and that's looking back, Chris, that's what I've always done. Back when I was in California and I was selling, HUD foreclosures completely renovated to FHA buyers. Well, I would say, here's a good lender that you can go to. Hey, I'll pay your closing costs, because they worry about how much down, how much a month. And that was a big solving issue. So I'd always try to solve the financing, never to this level. But for any investors out there, if you help solve their financing issue, price is not their most important thing. It is really solving that financing issue. At least it has been in my career.
No, you're absolutely right. And I mean, listen, I've been in the money game for 20 years. I consider myself one of the, I'm not going to say best, but one of the top money raisers in the space that we're in. And not only that, I'm the only one that's created the dating site for money. Private lenders meet people that, need money. And that's what I've created, is the only true private lending community called Private Money Club. So the thing you said there, though, forget about money or houses or singles and quads. You mentioned something that I think everybody on this podcast needs to really take seriously. You mentioned that you solve a really big problem, and the financing is that really big problem, plus the new builds and the price point you're building them at. So think of, if any of you want success like Jim, all you need to do is figure out a problem and solve it. And the problem is never easy to solve, which is why not everybody does it. But once you solve that problem, you make more money than you know what to do with. By solving the money problem, which is the number one problem in most all real estate investors' lives, you now just created literally just a cash flow machine that will never stop as long as you can control and supply the financing in that capacity. And you figured it out. Plus, you got this big conglomerate, which, I mean, most people listening to this should know it or look it up. And not only that, like, I've studied Japanese culture and Japanese businessmen and women, and it's the best there is. It's their culture, folks. It's their ethics, because it's bar none. I mean, read the book Shoe Dog, and you'll understand a lot about Japanese business and culture. And the fact that you're paired up with one of them, number one, well capitalized, but number two, they've treated you well because that's just their nature. So I think you've done a lot of things right, Jim. I really do. But, what would be some advice? Because there's a lot of real estate investors. I know you know a lot of syndicators, and so do I. Capital calls, freezing prefs. I mean, got all sorts of issues in that. But it also, although scares some people away from that industry, it creates a massive opportunity. There's a lot of people with multifamily right now that are, I'm going to say, they're on life support, and they're going to need to make some moves here in the next year, definitely this year, depending on what happens. But folks, you just need to be out there looking. You need to be pounding the pavement, and multifamily might be a space. I'd say you're a bit early now, but late 2024, 2025 might be a good time to start looking for bargain hunting, but might also be a good time to build a business like you have, Jim, where it's multifaceted. If somebody's going to go multi, also have an arm that's single families. And I think the single family market, I had a guy on this podcast the other day who's all about the data, and I think it's fascinating how residential, we'll just call residential, 1 to 4 units, has barely changed, even though rates have gone from 0 to 5.2 to 5.5. It's insane. Actually, pricing has gone up about 1% in the last year, which has been hard for everybody. I think it's phenomenal. You're in Florida, so you're even more insulated, but it's wild. And he had all these charts and these things, and he explained the relevance of why it was. I'm not going to get into it today because it's just a lot of numbers, but it was fascinating. And it changed my perspective of what I think is going to happen in the future with single families. And I do think we're going to see a pretty consistent pricing on residential. So I think anybody that thinks that residential is going to fall off the face of the earth in terms of price, and many economists do, I think they're going to get that wrong. And they're going to get it wrong because the Fed's going to play this game where they're going to bring these rates down, which is going to open up, homes like you have to another 5, maybe 7 million people that today do not qualify for mortgages. And I think it's going to be a pretty interesting dynamic. What is your take on the next 2 years in real estate?
Yeah, and everything you said, I agree with. And I think that people, if builders or not builders, but your syndicator friends, apartment friends, if they're listening, you got to be prepared to have some hard conversations. You might have to make some capital calls. You might have to, you're having hard conversations, Chris. And I'm sure it's pinnacle to survival, to your reputation. Don't hide from them. You have to talk to your investors. You have to stay in touch with your investors. We had to when there was delays and material price increases 2 years ago. But if you'll have those hard conversations, again, have solutions. Normally, as you said, look, the end of 2024, 2025 is not that far away for them. You can make some progress. And I believe, again, I look into the commercial some. I really focus on the residential because that's where I am. The thing that I learned of where we got into trouble, and it's all in the data. You can look this up on the Fed charts. Where we got into trouble in 07, 08 was inventory. There were areas, even here in Florida, that were completely overbuilt. There was just amount of levels of inventory was ridiculous. It didn't match up. Today we're an inverse of that. We are still low on inventory, and you can't even keep up with the building right now. Before the pandemic even started, like Southwest Florida where we build, they were 3 years, according to the municipality report, they were 3 years behind on needed rental inventory. And then all of a sudden the pandemic happened, and that area was the fastest growing in the nation. So I always say, whatever area you're in, Chris, look at the inventory levels. I mean, that is supply and demand. And if there's still low inventory right now, and they're about to drop rates, which everyone said, I mean, it's an election year. People like to look good in election years. They're going to be dropping. And what is that going to do to the market, especially these small residential markets? Like if you own duplexes and quads right now, or you're thinking about it, I'd buy them quick.
Yeah.
Just at the end of November, I don't know if you even saw this, Fannie Mae came out with a new guideline.
Yeah, they revised their guidelines. They revised their numbers, and they said they're looking at 5.8 by the end of 2024, which to me, it blows my mind.
Well, they're not only doing that, they're lowering the rates. And for an FHA buyer, for a while, they had raised it up for years. For you and I, if we're first-time home buyers, to buy a duplex or a quad, you got to put 25% down. Now, that's a lot of money. They've dropped it to 5%.
I did hear that, but I didn't know that was actually solidified. I heard them rumors.
Now we have these new investors
5%.
that live here, and think about this. When you and I were just starting out years ago, you could buy a quad now, and for 5% down, and we pay the closing costs, and so they're really truly only coming in with 5%. They can live in one unit for free, rent the other 3 units. So we're getting these
good old house hacking.
Yeah, little house hackers coming in on duplexes and quads. I'm building one with my 20-year-old son. It's his first property. So it shows that this is a time to get in because this is going to continue to get more popular. They only approved it right around Thanksgiving. Then we had Christmas. Here we are still in January at the time. So I think that's going to be something to look for if the commercial realm's not working for you. Well, hey, a couple of duplexes and quads can add up pretty quickly. There's to a small multi-unit, and you're not stuck in that commercial wheel of financing, which is a disaster right now. The residential realm still has some guardrails around it.
Yeah, and it's going to get worse. You're going to, the tide is going down, and as the tide goes down, more of those risky drivers start to pop up out of the muck under the water. And you're starting to see that, and you're going to see a lot more folks. And yeah, you're right. That commercial world is in massive trouble. And there's study after study talking about the commercial debt cliff. And that's because all these commercial loans matured 5, 7, and 10 years. We are literally, we're hitting it, man. That's it. And these people that have these loans, their expense on their debt service is going to double. They're not going to be able. It's not going to work. It's not going to work at all.
Well, they're not going to renew it. They're not going to get a new loan. Yep. And even if they could, the assumption they did, like we said, is at least 2% lower than what they had expected. So I feel for them. I feel for them, it brings back my '07, '08 days, which were not fun. But if you have some hard conversations, you do the right thing, you can hang in there. Because I do like you said, Chris, I think there's going to be tremendous opportunity in the commercial area as we work through this.